Good morning, traders. We write Friday, 11th of April, 2025. Welcome to a new flow show. First of all, I hope that everybody is surviving these moves in this, we can call it safely now, a pretty wild market. The US and the dollar has very little friends left for now. It's going very rapid right now. So we are going to have a very interesting flow show today. But let me first start with our own Forex Analytics liberation offer. You know that Blake has already been talking about that over the past shows that we had face, and I've been talking as well about something very special to come. And here it is. It's our own Liberation Day offer. You can enjoy up to 40% discount on monthly subscriptions. So um, don't wait, sign up today, come and join us in our Forex Analytics community. The traders over there, for most, have been having a ball with these moves because we have been talking about these kind of moves, about the possibility for all of this to happen many times in our different rooms there. So come and join us. Now is the time. You can enjoy that very nice 40% discount. Okay, so I just will post the link in our chat room for those who will be interested in coming to join us very soon. Well, actually, very soon. Sign up today. We are the most active FX community around the globe, dare I say myself. Right, what is happening in those markets? Well, I mean, it is Armageddon, right? It is Armageddon. And I'm going to take the words of Mr. Larry Summers here, who I think it's yesterday evening or overnight, said that the US bonds trade like the debt of an emerging country. You remember a while ago we were saying that the sterling was starting to trade like an emerging currency. Well, here we are in the US as well. I'm going to say when US bonds, when US equities, when the US dollar trades like it does now, which is very close to what emerging market currencies are doing or countries are undergoing, it is getting very dangerous out there. So first of all, I would like to warn everybody, those moves, if you see 100 pips moves in the most liquid FX pair around, which is a euro dollar, if you see 100 pips moves in the space of a minute or a couple of minutes, something is not right, okay? Liquidity is probably not really there. Huge amount are shifted around. So this is the time to be very careful. And we see it on all the currencies, especially those who are seen as safe havens, Swiss franc, the yen, obviously, but also even the euro, which is now I've been talking about this kind of effect that we see on euro crosses as well when the world is in pain. We see these kind of moves in the euro as well. So we're going to have a very close look at what is happening in those markets. So basically, what's going on in the markets right now is really a confidence crisis in the the way that the US and Mr. Trump and his administration is handling all of this. We've seen the major country now, which is China. He's trying. He's desperate for China to come and give him a call to start dealing with them. The problem is that China just retaliated about an hour or so ago, slapped themselves 125% tariffs onto the US, which are coming into effect from tomorrow. And they also said they will ignore the US if it keeps imposing more tariffs. So nothing is settled there yet. That is really one of the main focuses that we have in this the whole tariff saga now. But what I think personally is even more important right now is that we see, and I'm going to spare you all the headlines because there's so many of them, but that we see all the U.S. trade partners now talking to each other before they even get into negotiations with the U.S. So really, the market is taking this as the gamble on the tariffs is not working right now. The impact that all of it could have on the United States is seen as very bad, especially when U.S. trade partners like the EU and the different countries in the EU, even because we heard China and Spain even talk to each other, right? But the EU is also talking with Australia, UK, EU. Um, China with South Africa and Saudi Arabia, where the US is planning to meet with the Arab countries. I think there's a delegation going over to the Middle East. But even before that happens, they are already talking together on how they can solve or find a solution amongst each other to counter those US tariffs. So this is where we are now in the markets, is that the market says that the gamble on the tariffs to get people around the negotiation table, which has also again been confirmed yesterday by Lutnick, saying that the aim of the game is also, and I think Hexet or Hassett as well has repeated that the aim of the game was also always to get people around the negotiation table. Well, he's played with time, and the market says that he did not have the time to play that way. Now, all of this being said, the situation is still extremely fluid, okay? There can be deals made. EU von der Leyen was relatively optimistic, saying that now we have 90 days to negotiate. But at the same time, as I said, they are already talking with other partners. We heard we heard them talk with Australia, with China even. They are planning to put not duties on each other, but just a minimum price, for example, on Chinese EV product imports into the EU. So we see that everybody is negotiating already with each other before they even go to the negotiation table with the US, and that's where we are now, and that's where this big confidence crisis that we have in the US gamble. There is very little other words, is not working right now. So that is where we are in this market. Okay, so that those are the big lines. There will be negotiations because, as I said, I mean, there's plans to go to the US, to go to the Middle East. We just heard from the Japanese delegation as well, the head Akazawa, saying that now the meeting finally with Besant is planned for the 17th of April. So going forward, we will have a lot of stuff going on still, but for the time being, we are, for the US at least, in a very naughty spot here because the world is not buying what the US administration is doing now, and we see it in all markets. We saw those wild swings in the equity markets, for instance. We see the bond market trading like really, it is trading like an emerging market. I mean, there is no other word, and we have to understand the implications of that. When you get wild swings in the market, we as retail traders, we always say like, oh, okay, let's try to either accompany it or counter trade it. But sometimes you look at text and you don't think too far behind that. But we need to put everything into context, and this is where we are now, and that is where those kind of moves come from. As I've been saying on the shows as well, and on Face no later than yesterday, I think it's going to be erratic, and some erraticness we have, but but the move is still one that is for a lack of confidence in what the US is going to do. So I kind of expected these kind of moves to happen. even I am surprised about the speed of it. I mean, when you do between top and bottom more than 300 points in euro dollar in less than 24 hours, it's massive. And again, I repeat, this is the biggest FX pair there is. There is in normal times yards of liquidity on nearly every pip. But I don't think that this liquidity is now in the market because everybody wants to get out through the eye of the needle at the same time, and this is what we are living now. And being Friday, it's a very very risky day today. Okay. um Two things can happen here. We can all of a sudden have a through social post by Mr. Trump that he's going to talk to Xi over the weekend, and then everything can at least partially reverse. Okay, but if nothing new happens after, especially now that China again slapped additional tariffs onto the US, and it doesn't seem likely that Xi is anywhere close to picking up the phone to Trump right now. We have to be very careful today because this could be another very, very nasty day coming. Okay. Um, I'm going to quickly run through any of the data that came out overnight, but I think today is a day where we have to really look very closely to what is happening in markets and where the danger points are. Where also we could potentially expect some kind of smoothing actions, perhaps by some central banks. But because, I mean, regardless what's happening in equity markets, the FX markets and the bond markets are very important, and they are for the time being moving very very rapidly. So we are going to have a look at where perhaps some, at least, of the central banks could come into action. And what I'm thinking about right now is obviously the S&P, since seeing the huge move that we saw in all things Swiss franc. Okay. So what happened yesterday? Let me just quickly run through my notes as well, because I noted down some things. We had this well, we had this CPI data, but again, it did not help the dollar at all. That is one thing. It did not help the dollar, but those are still March data. Okay, this is not the main thing that happened yesterday. The jobless claims were well, I mean, just stable. It may have helped the dollar a little bit lower, this one, but I think we all know that inflation data are going to be evolving in the months to come. So that, I think, was not your main reason why the dollar sold off, but it's purely confidence. Then we had the US 30-year bond sale, which was actually pretty okay. But obviously we went in at very very high rates. The when issued was at 483 4.839%, and the high yield was a bit through there at 481.3. So that's a pretty decent auction. Perhaps also adding a little bit to the fact that the dollar was a bit heavy, but uh, there was a risk that those auctions would go really badly. But seeing those really high levels now that we had in the yields um, over the past few weeks, I think that attracted quite a bit of candidates to go to that auction yesterday. We had many talks about from the Fed speakers. They're all in well, I mean, they say one thing, the other, and the opposite. They don't know. They seem to be want to wait for things to see more clarity before taking action. But the red line in there, the fil rouge, as they say in French, is really that they want to wait and see for what is going to happen. Well, I just said a few minutes ago, I'm not sure that they will have time or a lot of time to wait and see what is going to happen, especially if a day like today, for instance, we would have like a big drop in equity markets or also faltering bond market. Okay, together with the dollar getting absolutely hammered. So yeah, I think that some of those central banks, they may want to wake up a little here. Although otherwise the market is at risk of an even bigger drop. Over to what's happened in today. Sterling got a bit of a lift there. We had this monster move in euro sterling to the way up when the euro flew away yesterday. I always say like be careful because the sterling is a bit of a risk currency. So no surprise on the move. Surprise on the amplitude. Yes, I still think that barring risk, really, those moves in euro sterling are not completely justified. But I'm really not standing in the way of them, only with very tinies and with extremely tiny risk. But we had some decent numbers here. Unfortunately, they are also February numbers, and we will have to see what is going to happen with the data going forward. We heard from Breeden yesterday. She said we haven't seen a very big impact on the sterling data yet, but they still may come. So she was warning against what may come for any country, but specifically for the UK, as she's a member of the Bank of England, of course. But take it for the face value. These were pretty decent numbers that we saw there. Yeah. Okay. Still only, let's say, 1.4%, but it's a lot better than what was expected. And also the revisions were slightly better. The manufacturing industrial production numbers also coming out on the strong side. Okay. So those were relatively positive numbers. I think those were the final numbers, were they, for the German CPI for March? In line with what we saw in the flash, in line with what we were expecting. Again, there, whatever happened in March until March was pre tariffs and everything, right? So I think there is we need to look at inflation, what is going to happen in the future, all right? So whatever happened before April to me is really old news. We trade in a different world right now. Yeah, Swiss consumer climate for this month expectedly a bit lower. And talking about the Swiss franc, thanks to Jack for mentioning it in our chat room. Another reason why you should be joining us, because not only us as Forex Analytics crew members are chatting, but we have a lot of help as well from everybody in our room all the time, pointing us to stuff that may happen, pointing us the things that they saw that we may have missed. The Swiss finance minister should be on the wires relatively soon, if he's not already speaking. Let me just quickly run through the headlines to see if anything has been said yet. No, not yet. So we're still expecting him to speak. I think it may be in about 10 or so minutes. So we will need to pay close attention because, as I said, Swiss moves have been extremely great. We have the March further today. We have the March PPI numbers. If they come in softer, it's for sure not going to help the dollar again. But again, I think they are March. If the dollar gets hammered on the back of it, I think it's just an excuse to further get out of all US assets, currencies, you name it. And then we have the preliminary Michigan expectations, and those data are now going to get quite important. Okay, call it on the inflation front, call it on the consumer front. I am going to stick my neck out and say that they're not going to be great, and especially look at the communicating vases here, because we have seen over all those past numbers where the consumer expects higher inflation, usually the sentiment data are coming off. Okay, so we could have another remake of this if the consumer judges that, whatever is happening now in the tariff environment, in the trade environment, in the supply chain environment, is going to be counterproductive, meaning higher inflation. We could see a potentially quite big drop in that number. I mean, I would find it logic that that this number comes down. A higher number here on the sentiment data would come as a bit of a surprise to me, to be fair. But okay, let's see what the U.S. consumer in Michigan is telling us later today. Without further delay, let's get over to what is happening in those markets. First of all, euro dollar. We saw this absolutely speedy ramp higher, and I've gone onto the longer term time frame here. Okay, from January, and I just want to reiterate what I said when we put out the expectations of for 2025. I said there is going to be some dollar positiveness or some expectations for the Trump administration to do very well for the U.S. economy, but it may be short-lived. It's actually happening a lot faster than I was expecting. I thought that this would happen more towards the end of Q2 into Q3, but I was expecting for it to turn around, and it's massively turned around. But this is even going a lot faster than I would have thought that this move would happen. Position for it in parts, but even for me, this is going a bit fast. 114.5 up to 115. There should be some resistance coming in. Okay, around these levels, around here. We saw the euro dollar stop in its traces and then come back down. This is going to be a psychological level to pay attention to. If this would break over the course of the day, don't rule out another 250 pips move to the upside, up to 117 and a half, up to 117 and a half. It all depends how badly the US is now looking at itself. And we have seen the euro, together with Swiss franc, for instance, being one of the strongest currencies here, because it is your next biggest block. So somewhere the euro is now acting as a refuge as well, as a safe haven as well, because it's the next biggest block where you can park your money if you don't have confidence in the other big block, which is the US. So watch carefully this 114 and a half, 115. Okay, if it would break today, this could go absolutely bananas. But it could be also after this move. It's been a very, very big move this week, right? If you look at it from bottom at around 108.90, where, by the way, I was always saying that, watch that 108.90. It's a pretty important level. We've been trying and testing it a good few times over the week, and then we have rallied higher. So, but it's been a very big move already. Yeah? If you take 108.70 up to 114. 3 quarters. We're talking about 6 big figures here. 6 big figures in a week in euro dollar is a very big move. So here now we have to be, I say, careful. And careful could be that we tap 115, just go slightly above, because there may be some option barriers as well there, and then collapse again for maybe, I don't know, maybe 200 points, who knows. But if we fly through here and hold it, we could be trading up to 117 and a half. Right here and now, I am still bullish this, but I'm starting to be a bit cautious just because of the amplitude of the move that we have seen this week. What can happen if we reject? We can get down into this 112.2070 zone. That is all very possible. That is about 150 to 170, 80 points away. Very, very possible. Looking for a reversal now is, you can always look for reversals, but I think it's dangerous to look for a reversal. I would say that any setback here will still be taken as a retracement. If we close the week below 112.20, that may be a different story. And then we may be talking again about those 109s or so. But I would say 112, 2070, pay very, very close attention. If we get down there and we start to rally again from there, that means that this story is not yet over. Okay. Um, Cable is less buoyant because we have seen this euro sterling ramp higher, but we are through this 130 figure 1030 figure 30 level. Okay, so I think that's already interesting enough. This is going to be the level that I'm watching today on any setbacks around 130 the figure give and take. Um, sorry, and if the dollar continues to sell off, 131.5. We just tagged it again a few minutes ago. 131.5 is a bit of an intermediate marker, but I would think that the big level here now is 132.60 up to 133. Why? Because it's also a trend line coming in here from the 142 highs. That was in 2021. That was the post-pandemic high that we printed in the cable before starting the massive move lower. Okay, so this trend line is coming in around 133, so that's going to be a very interesting level to the top. 130 figure 40 on the downside, I would say. Okay, if we start to close below 129.5, that would probably mean um, that there is a bit more dollar buying on the one hand, or even a big move lower in risk could actually put a bit of weight on the sterling as well. Point of no return for me right now is going to be around 128.60. Okay, that is going to be for me the point of no return right now, but we are well above. Let's look at what's happening in the yen. Breaking, we are breaking. And it's broken. The interesting thing here as well that we have to pay attention to, not only um, to the dollar side of things, but also to the yen side of things, is that on the 17th of April, that is 6 days away, we are going to have that meeting between the Japanese officials, Akazawa in the lead, and the US trade team as well, led by Treasurer Bessent and trade representative Greer, and that is going to be very, very important for what's happening in the Japanese yen next week. Okay. In the meantime, we have broken this 143.75. We are trading below. There's a bit of intermediate support around 148.70. We've come not too far from there, but I think the main ones here are 140.5. The prior low 139.60 if things continue, and then to me there's a big level here, which is the 38.2 of the whole move higher. And why am I not? Okay, here we go. Which is the 38.2 of the whole move higher since the pandemic low to the high in 2024 comes in at 138.75. Okay, if the dollar tanks more, if there is more risk selling in today's market. We know that the yen is also volatile, even though that the euro has taken over from the yen right now. But don't rule out much on a Friday. Okay. Um, personally, personally, I think we are going to find some kind of support coming in there for as long as we don't know too much about those negotiations, but also obviously look at the US side because it can get extremely dangerous out there on a Friday. Now, looking at the other side, because I think that the market is starting to be short, okay, and has been running shorts as well. Watch out if we start to get back above at any point of the day. I'm thinking, for instance, if any of the central banks would come out and say something about the markets being erratic, that there is risk to the systems and stuff. If we start to get back above 143.75, there may be a bit of a stop run coming in as well. So pay very, very, very close attention to that 143.75. Call it 144. Okay. I need to look at the Swiss because this is really where things are heating up. First of all, Euro Swiss, we are very close to those prior lows. Although we are now starting to see a bit of a rebound from those lows, we are back into the 93s. But be careful for the rest of the day. If we start to get below 92, the figure, we could need another big figure also on top of it if risk falters. But obviously, the most interesting here is the dollar Swiss. We are through that long-term range that we were in from 2023 all the way to 2025. We saw retests and sharp rebounds. We are now through it, and this is important. Obviously, it's important because of the lack of confidence, the confidence crisis that we see in the US. Swiss is a risk asset, but I'm starting to think that S&B may at some point start to show up here. If they don't, we could be on our way to 78, okay? But I would not now start to rule it out. And they can do it in several forms, okay? If they would intervene in Euro Swiss, for instance, trying to intervene in Euro Swiss with their system that they have of interventions, that would mean that they would sell a few euro dollars, and that would mechanically put some demand into the dollar Swiss as well. Now, the opposite, if they would say like, no, it's a dollar Swiss which is at danger, they also have the same kind of intervention plans, right? So if they would come in dollar Swiss and start to be bidding or buying dollar Swiss, mostly I think in this market, they may not go aggressively, but rather sit on bids. If they would be bidding the dollar Swiss, first of all, seeing that they are in their intervention, they would actually also need to buy euro dollar on the other side. Okay, so I mean, depending on the way that they intervene, you could see some inverse action into euro dollar, for instance. So that's going to be important. If it really goes very, very fast this year, they may actually openly come out and saying that they support it. Most of the time they do it stealth or just go and sit on the bids. But I am going to say that for the S&B part of things, this could start to be a little bit dangerous. Okay, seeing I've got quite a few questions here. Let's look at what's happening in the US 10s, okay, because it's really also the confidence crisis also is seen in the bond market. I think the range. I'm just looking at the US 10s. Everybody knows that 450 is a pretty big level. 450, 452. If it's only due to debt, if it's only due to inflation worries, we could see it trade through there for a while. Now, personally, I think we are at levels where we could see the yields starting to top out because of growth concerns. Okay, if the US is really going to have a growth problem, I personally could see that we are going to top out somewhere 450, 460 perhaps. It all depends how bad the bond market is viewing all of this. But we could start to top out here and then gradually come back down. Just remind you where I think is the neutral level around here, around 420. We are trading above right now, so that testifies of this bond move. But also look at what can happen here. I'm not a fan of charting too much the yield market especially, but some technicians may be looking at this as a head and shoulders potentially, where this could be topping out. But for me, really, it's going to be a psychological thing, and looking at how the bond market needs to react further to what is happening now in global markets. Okay, that is, I think, where I think we need to pay close attention to. If there are really growth problems arising again, then we're probably going to trade back down relatively quickly to 424, 410. All right. I am actually And this is something that I'm going to show you. I am actually looking at something in the in the futures here, on the 10-year futures. I'm actually hoping for a bit of a panic move here, which would bring us through this trend line closer to the 109, perhaps 108. And if I see that, I'm going to really think very hard about my strategy on growth and things like that. And I may start to get very, very interested here, Deresh, if that helps. Um, Got a question here. Aussie dollar resistance. Let's have a quick look. Aussie dollar has underperformed the Kiwi again. Huh? In the Kiwi, we are now trading around here, around this 58. We can move higher, I think around 58 and a half, but then start to take this channel perhaps again into account. So anywhere above 58 and a half right now, unless the dollar really falls out of bed, we may top out a little bit. And the Aussie has been underperforming, and we broke higher, we went higher, but when China is continuing to slap tariffs, or the Australians have said that they would not go hand in hand with China to counter the US tariffs. I think Australia is really rather looking at getting deals perhaps with the US, getting decent deals with the EU. I think the Aussie may find some resistance, 62 and a half, but in this one here, this zone here, 62.60 up to 63.20, maybe already a big resistance. Don't forget that in the more medium term, and we are still not yet there. You know, that's if you compare it to the euro dollar, if you compare it to the dollar Swiss and all those other dollars, we are still far away from this major resistance at 64. So that's telling me that the Aussie is still an underperformer. So I'm not going to chase this Aussie move higher here. I think we could run into a bit of trouble anywhere between 62, give and take 62.70, 63.20-ish. That is where I think we can find some resistance. Finally, gold. I've and people in the room know, and even people here as well know my longs in gold. Well, I've been done on my take profits. I thought 31 and a half, 32 was going to be a big enough zone, but of course, I mean everything is blowing out. Renewed tariffs from China onto the US. It is. It is continuing its rally. It's now trading around the 1.27, around 32 and a quarter. It could go up to 3,300 in current scenario. It's beat, okay? It's still very beat. I've always said it's beat. It's still bullish. We've seen bounces off all those interesting levels that we had. We've seen this move through 30 and a half, and it went up. It's still beat, no matter how you look at it. So who are we to rule out the move up into the 33s, maybe 33.70 even before it's over, depending on how bad the US market is going to look at itself today. Um, and that is what it is. 31.65.70, the prior high is going to be the first reasonable support. But I would argue that the main support now it's moved up for me now from this 29.50.60 that I said. I think now we need to look at what's happening if we ever get back to 30, 80, 90. Okay, 30, 80, 90. We should now find support to continue higher. If that would not hold in the meantime, if we see deeper retracements, and we can see those deeper retracements because we've had them all the time, okay? So I would say the main level here now is 30, 80, 90, that we should be watching carefully. So having seen those bond markets, having seen what's happening in the dollar, having seen what's happening also in equities. I haven't really looked at equities, but they got a pretty big slap yesterday as well, trying to recover today. Nasdaq, for instance, Where's my S&P? S&P, for instance, as well. We had a shot through that 53 three quarters, but we are now trading a bit lower again. I think we could either range a bit, but it all depends how the US is going to look at its own market again. We could get lower. Is the Fed ready to step in, like I was talking about the S&P? I wouldn't say so, because this is not getting bad enough yet, but they will be looking at the bond market. And if there is really big shit happening in the bond market in today's US market, I would start to think that we may have, or for that matter, in global bond markets, I would think, because Powell told us again on his last chat that he had a week and a half or so, or a week ago, he told us that central banks are regularly talking to each other. If we really see a very, very erratic and very big moves today, I am now going to say that we may hear, at least hear from the central banks having chat to each other. So watch carefully what's happening in the dollar, watch carefully what's happening in equity markets, although I don't think we are at panic levels in the equity market yet. We are not at panic levels in the bond market yet for what our yields are concerned. But imagine that bonds collapse another couple of percent. We may get a little closer to some central bank chatter. Okay, this is what I am now starting to think. All right. Well, that's it for us for this week, and what a week it has been. Ryan will be back on Monday, and I am just going to where is it? I am just going to take this page up again. So Ryan will be back with us on Monday. There is always weekend risk in these markets, so be careful. There could be all of a sudden talks between the US and China, which would be the biggest news that could happen at this stage. Okay, but in the meantime, without further delay, come and join us in our chat room, because our shows are just half an hour, 40 minutes about the main things that are going, but we are going into far greater details. We're talking with all our great colleagues and followers and colleague traders, fellow traders in our chat room. Take advantage of this offer and come and join us. And you know what? I'll see you later today for those who are signing up, and I see you latest on Monday in our chat room. So take advantage of this. Thank you very much, everybody, for following us as usual, and have a safe Friday trading and an excellent weekend. Be kind to those you love, okay? Be kind. We talk to each other again on Monday. Ciao.